All right, folks, break time's over. Back to work. We got one more day left this week before the holiday coming on Thursday morning. And I'll tell you, I know markets were a bit slow and sloppy this afternoon, but look at these charts right now. A big move higher on the S&P and SPY and a beautiful trading range right now on the Nasdaq. Big move, trading range. These are two of my favorite types of market conditions. So I know things are a bit slow this afternoon, but I'm very excited for what should be a great day tomorrow morning. I have a number of trades, easy trades I'm tracking for tomorrow. And as always, we're going to cover my favorite entries, all the exits, the entries and targets. I'm going to give you guys an easy roadmap to make some money by the time we're done tonight's video. So charts look fantastic. Enough of the intro. Let's go make some money, some turkey and stuffing money before Thanksgiving holiday later on in the week. S&P and SPY is all ready to go tonight. Nasdaq, triple Qs are all ready. I have three very simple but very important clues on these charts in front of us that are telling me where I think the winning trades are coming for us tomorrow. One of those big clues is right here on these hourly charts. It's very easy to see right now. We are bullish overall on the S&P and SPY, bullish overall on the Nasdaq and the triple Qs. I like to use these hourly time frames, these higher time frames, as an overall directional filter. A directional bias, as we call it in our trade room. But this is only one of three important clues. I have some more important clues on some tick charts. We're going to cover that in a moment. The direction is kind of the easy part, right? We'll talk entries and tick charts here and more important clues in a moment. Before we do that, though, there are three things on my mind for tomorrow. The first things first is block of news, durable goods, and GDP at 8:30 Eastern time. Arguably, that durable goods orders is the more important number of the two at 8:30. But the biggest news for tomorrow, and arguably the biggest news of the week this week, is that personal income number that is well known as the Fed, J Powell and the Fed, their favorite number for inflation. So we're wondering, will the Fed keep cutting rates in December? That is one big data point we know the markets are going to react to tomorrow morning. Remember, anytime we see 10 o'clock news, Red Star news, you best be paying attention. And the third thing for tomorrow is, don't forget, Thursday is a day off. Friday is a holiday. I would imagine traders tomorrow are going to be taking bigger risks because they don't have any time to make their money on Thursday, Friday. So end of the month, end of the week for tomorrow, expect volatility to kick up a little bit tomorrow. So make sure you size your positions accordingly. GDP, durable goods, 8:30, personal income, 10 o'clock Eastern time. And again, be prepared for an uptick in volatility as the time ticks down to the end of the week and the end of the month. Let's get back to our charts though, because it's good to know when that number is tomorrow morning, but we all know by now the money is made on these charts, don't we? Let's talk about the S&P and SPY first. We'll finish tonight, of course, the Nasdaq, triple Qs. I mentioned earlier, too, we have a bullish overall bias on the hourly time frame. Look at how close we are to retesting those all-time highs. That's not the most important clue, though. The most important clues tonight are over on the tick charts. I like to use these tick charts because tick charts are based on volume. They make pattern recognition so much easier. All the time frames, by the way, are in the upper left-hand corner there. And if you're watching for the first time right now, welcome to the channel. That is the 21 EMA. It is pretty much the only indicator I use to find lots of winning trades each week. There are two more, I think, more important clues here on these tick charts. First big clue on the tick charts, ranges. Range right there. Range right there. Why is that important? Well, because anytime we see a range breakout, we know breakout pullbacks off that range. If we're lucky, a breakout pullback off of that range. Ranges act like magnets. Second big clue here. This is a pretty big move that we saw pretty much the entire day today. We got that retest of that low. It's too bad it happened overnight, but the market did what we expected to do here. Had that retest. If you watch last night's video, that should make sense. Now we rotate off that low. This is a really, really big move right now. Anytime we see a big move going higher, I do not want to buy high, right? I want to buy low. Whenever I see a big move like this, I always think about a two-legged pullback and a retest of the high. Big move up, don't buy high, buy low, buy a two-legged pullback. So put all these clues together. Overall bullish on the hourly chart, range breakouts on the tick charts and a big move going higher here. Knowing this, I have 4 trades I'm watching for tomorrow and a couple completely different trades we're watching on the Nasdaq. So if you like making money, I would definitely recommend you watch this video all the way to the end. Trade number one is definitely going to be that two-legged pullback. Now, when I say two-legged pullback, think about a measured move that goes a bit too far. One leg, two leg. What I'd love to do is line up that two-legged pullback right around the low of that channel, right on that breakout pullback off that range. That would just be a dream come true. Now, this may go further because you got that range down below us. So because I definitely want a two-legged pullback, but I don't know exactly how far that pullback will go. What I do know though is this is the last place I want to be selling, right? I don't want to sell after that pullback here. So if I can see bears coming in, trying twice, once, twice. Remember, sellers want to sell high. Make sure it's a higher high in price. Once those bears try twice, now you're trapped. Now your stop losses are going to trigger buy orders. These failure patterns are an easy way to trap in sellers and squeeze those stops. Now, where does the market want to go? It probably wants to go back up and take out that high and probably wants to hit that all-time high up around 53 and a quarter. Want to make more money? Add to your winners. An easy way to do this is to add on with a bear trap pattern. Now, bear trap patterns are very simple patterns. Step 1, separation off that moving average. Step 2, higher high in price. Step 3, get right below that low in between. Nice strong green candle closing above that 21 EMA, a technical bear trap. So 1 out of 4 trades I'm watching for tomorrow is a two-legged pullback. Don't be picking that bottom. It could be anywhere down in this area here. Trap those bears in with a failure pattern and then add more on the winner with that bear trap combination. Now, second trade for tomorrow. Let's talk about if we go sideways up here. We're running right into those all-time highs. We may not get that two-legged pullback like I want to. We may end up going sideways in a range. Now, ranges, they act like magnets and they love to rotate. So the amount below, the amount above, the amount below, the amount above. We use pendulum swings. We measure, right? We measure the amount below, the amount above. We measure distance outside of that range. Okay, if you understand that ranges act like magnets and they love to rotate, if we're lucky enough to see a range tomorrow morning, that will anchor this market way up top like this. All we do is we wait for a breakout. We know that that range overhead is a magnet. We know we have prior range support, trend line support. This is the last place I want to be a seller. Let's use that same technique, that same 1, 2, trap those bears in, squeeze those stops, and remember, add to your winners with that bear trap combination, that separation of moving average, higher high in price, and that trap below that low. Now, this is why I love ranges so much. Remember, we can measure now the amount below the range, we can project the amount above the range, and that becomes our final target. I always take half off at the retest the high, but please do yourself a favor, leave a runner on that pendulum swing as it goes higher. If it goes sideways, look for what I call failure patterns off support below that trading range. That's trade number 2. Trade number 3, watch for a fake out breakout. We oftentimes see ranges form. We see a breakout higher, but we don't continue going higher. We wind up getting whacked right back down again. I do not want to chase after this going higher. Remember, we're right into those all-time highs here. If I see this thing go sideways in a range and we break out higher, watch for it to kick back against us. Now, remember, measure the amount above, measure it down below. When this thing finishes off that rotation, this is going to feel like a reversal. It will feel very bearish. In fact, when I was a rookie, I got roped into trading those all the time. This, again, is a great spot for a bear trap. One of my favorite ways to use ranges is to look for price to fake out breakout off the high, take the amount above, project below. That gives me now my entry location. We're not gonna pick the bottom on this. We look for that same again. It's that failure. As you can see, once you learn what works, keep on working it. And again, ranges, they love to rotate. So again, it's a fake out break off the high, that pendulum swing, bear trap, or again, a failure pattern into a bear trap combination. Leave those runners on the opposite side of that trading range. Boy, I'm getting excited just talking about this stuff right now, but let's slow down for a second because I know that most of you guys watching right now, you know these patterns. You're making money with failures and traps. You know why we love ranges so much. But if you're watching for the first time right now, this might be a brand new language, a brand new strategy. But don't you worry though, I teach the entire roadmap, the entire system. I have hundreds of examples of range plays, failures, trap combinations. Guys, I teach so much more of this in our free video classes. I'll put a link up topper for you. Don't you worry, upper right-hand corner, hit that link that popped up there and take that free trading course because the strategy I teach in that short video course will teach you a simple trick we use in our members trade room that tells us exactly where the winning trades are going to be each day. More importantly though, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries each day, if you've lost your confidence in your current indicators, your current strategy, again, hit that link that popped up there. Watch that free video course. Everyone loves the trade examples I include in that short video series. The best part is, guys, it's 100% free. Also, too, I'm going to put all the important links tonight. In case you can't get the link popped up there, I'll put all the important links you'll need to learn more of this stuff in the description of this YouTube video. Definitely start first with that link below, the free video class link. Learn the roadmap. Most folks start making money on their own with the free video classes. Also, keep in mind, too, the place to be each day is in our trade room, 8 o'clock Eastern time. I'll put trade room membership links there for you. And keep in mind, I post a lot of charts and videos and mindset stuff on Twitter, or X as they call it these days. If you're on Twitter X, again, give me a follow. All the details you'll need to learn more and hopefully earn a lot more will be linked up in the description of this YouTube video. So now you know where to learn more. Where did we leave off? We talked about that two-legged pullback, by far one of my favorite trades for tomorrow. We talked about the range here, and what we love, range is trap below, trade rotation. Beware of that fake out breakout off the high. Okay, let's talk about a couple more variations of this. Then we'll grab the Nasdaq. The Nasdaq is quite a bit different than the S&P is right now. I mentioned earlier, there's a range all the way back there, that 6,000 big round number. What is one thing you notice about that range? We never get a breakout pullback, did we? We never did. We broke out, but we never got the breakout pullback. I would think of this as kind of unfinished business. So if we're lucky tomorrow, we'll get a nice big deep pullback and then back up. Now, I mentioned earlier, I like to use these I call them failure patterns in our trade room and squeeze those stops back up again. But you know what though? If we get that really sharp pullback, there might be so many buyers down there, we may not get that failure. Oftentimes these sharp pullbacks like this, they wind up kind of V-bottoming and whoop, right back up again. So what do we do in those situations? I can't pick the bottom on this, but I don't get a good failure pattern to trap in those bears. What I do in these cases is these V-bottoms, when a market V-bottoms off that low, it almost always begins to grind going higher. These are very, very easy whenever it does this. The key is don't chase after it. Market trend line off the highs, bring that trend line down around that low. That'll find you a new bull channel. Now, repeat after me. Look left, find one of these prior swing lows. What I want to buy that first test off the low of that channel. Now, this could be any of the entry patterns you guys are learning inside our free video class. It could be a trap pattern. Look at me showing you right now. Oftentimes, we'll get underneath that 21 EMA, give us a failure pattern as bears get short below that 21 EMA, failures into pullbacks into strength moves. If you're going to my free video classes right now, that should make sense, right? So traps, failures, pullback, maybe a strength move on the way back higher. We already know where the market wants to go. It wants to go back up and take out that high. And of course, the all-time highs are just begging to be taken out right along with it. So one variation of that pullback. And again, this could be a two-legged pullback, bounce right back up again. Just don't chase after it. We'll find those V bottom reversals here and grab that first test is the best test. First test off the low of that channel is one of my favorite trades here if we don't get the entry on that two-legged pullback. Next up, oftentimes we do get that strong run down. We do oftentimes get that two-try failure and we get that pop right back up again. But many times though, that move lower is so strong that the market comes up, it holds off a prior level of support, oftentimes holds off a level of what is now resistance now, and we see another leg going lower. As we saw late last night, double bottom retests in an overall bullish market are one of the easiest, most consistent types of winners we find in our trade room. The key is, remember, right? Anybody who sells up here, they become buyers as they take their profit back at those lows. So what I always do is double bottoms are a gift to the buyers in an overall bullish market we saw on the 60-minute time frame. So as we pull back now, think about that same 1, 2, trap those bears in, squeeze those stops. Now on these, we can be very careful. We don't want to be chasing after it. The market wants to go back and take out that recent high. So as I try to add to my winner, as I try to jump in on this trap combination, I just want to make sure that bear trap entry, that trap combination, I want to make sure it happens before I take out that high. All right. So again, a double bottom. When bears get short here, they become buyers down here. The last place you want to sell is at that double bottom. A great place to trap in some rookies, squeeze those stops, add more to your winner, take some profit off of the high here, and leave that runner hopefully back to all-time highs. Those are 4, maybe 5 my favorite trades here on the S&P and the SPY. Now, let's talk some Nasdaq now, because the Nasdaq is quite a different, game plan for tomorrow. Now, Nasdaq, you'll notice here, bullish right now on the hourly. We're still trying to break into that pullback zone, that breakout pullback zone. If you know about ranges, we know that anytime we see a range breakout, we know this area is serious level of resistance. We'll talk about more about that on some tick charts. Before we dive into the tick charts though in the NASDAQ, let's slow down for a second. If you're enjoying this video right now, please help me grow this channel by hitting that like button, subscribing, and sharing this link with other trading buddies. Because YouTube rewards me every time you like and subscribe to this channel. So I know we're all busy people these days. It's a couple days for the holiday season right now. So I appreciate you guys spending a few minutes with me every evening on these videos. So thank you so much for the likes, the shares, subscribes, all the support. Now let's talk about NASDAQ. Over to our tick charts here right now. On the tick charts right now, again, a 4,000 tick chart here on the NASDAQ. There's one really, really obvious clue here on the NASDAQ. We are bullish into a trading range. Now, whenever I see a bullish range like that, there are two basic trades I look for. One of them is a breakout pullback, right? Breakout pullback off that trading range. The other is a bear trap underneath that trading range. If we understand that ranges are magnets, a bear trap underneath a bullish range, an overall bull market in the 60-minute time frame, is a great way to make money. Now, there are different variations of these. For example, I mentioned earlier that if we go higher, I love to get those two-legged pullbacks. Think about what was resistance becoming support. And again, we mentioned earlier here how we like to use those two try failure patterns into bear trap combinations. Now, remember, whenever we see a breakout of a trading range, the size of the breakout leg is always the measuring leg. So once we know how deep that pullback goes, then we know where to leave our final target. We talked a lot about that already on the video. However, though, keep in mind, the NASDAQ is quite a ways away from the all-time highs. I wouldn't expect this on the S&P, but I definitely think the NASDAQ has plenty of space to run because of that. And because Thursday, of course, is a holiday, don't be surprised if we see a breakout that begins to grind going higher. We call these pop and grind breakouts. Now, these, we mentioned earlier on the S&P, all I do now is mark a trend line. Off the highs, I bring that trend line down around that low. And what do we always say? Look left, find some prior swings. And as always, I want to get underneath one of these prior swings and apply any of the entry patterns you guys are learning inside our free video course. So under prior swings are where traps live. Under the 21 moving average, the EMA is where failure patterns live. Failures into pullback combinations, part of the price action cycle I teach inside our free video series. Now, one cool thing about a pop and grind breakout is the breakout leg, that pop leg, is the measuring leg. Remember this, anytime we see a range breakout, the breakout leg is always the measuring leg. So the first leg there, that breakout leg, the pop leg as we call it in our trade room, that's your measuring leg. Once we know how deep that pullback is, now we know where to leave our final target. If you want to make more money, get better at letting your winners run. And tomorrow, I would definitely leave a little bit of a piece to run there because I'll tell you, end of the week, end of the month, markets love to make big runs when there's no trading day coming tomorrow. So that all-time high is begging to get hit there on a possible pop and grind. Now, as we go lower here, we talked about earlier how we'd love to incorporate support levels, run this thing lower, trap those bears in, squeeze those stops with a failure pattern. And again, not to repeat myself too much here on this video, but I'll tell you though, once you learn what works, you'll keep repeating yourself over and over as well. So that failure and trap combination, remember, measure the amount below, project that up above, leave that runner, right, for that rotation back higher. And as I mentioned before here, if we do wind up running lower here and we don't get that 1-2 back up again, don't be afraid. Well, don't be afraid. Don't be surprised if it V bottoms off of that low, starts grinding, going higher, right? Again, we know now, mark below, mark above. We know where the market now wants to go. It's just a matter of getting into it at this point here. The most important thing is we don't chase after that move. Okay, and I'll tell you right now, that little voice in your head is going to be begging you to jump into this market, right? At least it always does for me. When I see these V bottoms, that voice in my head keeps saying, come on, man, get in, you're missing it. I'll tell you right now, I have learned the hard way. Your patience is rewarded. Draw that trend line off the highs, find that channel off that lows, and again, over and over we go, get that trap below a prior swing. First test is the best test. And as always, right, if things fall apart, if we make a big, strong run going lower, we love the idea of double bottom retests here. Don't be surprised, as always, if we get that 2-try failure, if we pop it back up for whatever reason, right, they hold the underbelly of that range. We know that ranges love breakout pullbacks, make that next leg lower. Remember, double bottom retest in an overall bull market are not a reversal. They're a gift to a wise, smart, experienced buyer. Trap those bears in. Again, horrible spot to be selling. If you want to sell high, right? Don't sell at that low. It sounds so easy, right? But when I was a rookie, I would chase this market all over the place, and I was on such a fast time frame that I wouldn't see where I was in the big picture. So if this is a horrible spot to be a seller, it's a great spot to be a bear trapper. Trap those bears in with that failure, and again, add on with that bear trap combination for that run going higher here. This, a double bottom retest like this is oftentimes an easy and lucrative way to make money. Because again, anybody who sells up here, they're buying their way out right there, right? All kinds of buyers at that low. Rookies get trapped in, they become buyers when they get squeezed out of their short trades as well. All right, guys, that's the plan for tomorrow. Now, speaking of tomorrow, 1 day left for the holiday, the place to be every morning in our trade room. Guys, the easiest way to start making money in these markets to come out, learn and trade along every morning at the opening bell. I'm going to put all the important links you'll need to learn more, join our trade room, take our free video class. I'll put all the links you need in the description of the video of the YouTube video here tonight. Start first with the free video course, enjoy all the trade examples. People love that free video class. Then come join me in my trade room and we'll do it all together. We'll trade together every morning at the opening bell. In the meantime, a very happy Thanksgiving. Be well, be nice to each other out there. Make sure you eat a lot of turkey and stuffing for me and be here next time. Adios, amigos. Bye for now.